recording. All right, guys, it's another Tuesday. We're in October already. October 6th, 2015. The theme has been what? We're in this conference room. We're talking about what's gone on the last week. We had a reversal 2 weeks ago when the Fed came in, didn't raise rates. They rallied. Reversal came off around 2011. Okay. Now we had the similar thing on the opposite on Friday, Unemployment Friday, a few sessions ago, when they sold them off after the number for a few hours and then really rallied them back quite a bit the next whole half of the session, right? The afternoon, they took them, closed on the highs and everything else. So we've been somewhat bullish the first couple session and a half of this week. And then we kind of get another about face that was done at the highs with the NASDAQ keying off that they were weaker than the rest of the complex. We came off at 82 even, kind of failed driving through yesterday's high and came back in, couple good points to get you bearish, keep you bearish. Had a magnet that eventually got achieved at around 65. We jump out. Hopefully there's less and less randomness as you go each day through the course, through these meetings, through the trading room. And that's what's key. When you're seeing it better, it's because there's less randomness involved. So the name of this class is exercise. This is another exercise. What happens next? If you're not going to do this exercise, it wouldn't work for me. If you work for me, I know you'd be doing it, but it's all up to you guys and how you want to get a feel. You want to get a feel, learn how to quote, learn how to trade your dome, but now also learn to do this exercise. And then what happens next? Test yourself. Give yourself confidence. If you're not confident, at least know that. Or if you're not getting good, at least know that you're not going to get confident unless you're good. Listen to that. Listen to yourself. Kind of anticipate what's going to happen. So what does that mean? Well, let's go in here and go to the sketch pad part of the slide, and let's just get into what does it mean? What does it mean to go through this exercise and anticipate? That's what trading is, right? Anticipation. So if this happens, what is going to happen next, right? Probably that. Well, how do you anticipate that before it happens? How do you see that? How do you get yourself confident that you could see this market action before the rest of the world sees it? You can anticipate. You know, if you get a market that's doing this and it's going sideways, you shouldn't be surprised if it flies through that top black line or flies through the bottom black line, right? Buy stops above, sell stops below. But do you see it before the rest of the world sees it? The only way you're going to make money in this business is to anticipate better than those that are trading against you. Other short-term day traders and those kind of players, how do you get better? Well, you got to get better in anticipation. We talked about magnets. If there's one below and there's one above, which one are we more likely to go to? And if it's the upside one, then you're bullish. If it's the downside one, then you're bearish. But that's going to get you confident when you're better at picking the magnets of where it's going. Then you got to implement where you're going to execute. Be patient when the bulls are in charge. That doesn't mean you get bullish necessarily. You could remain bearish, but you're patient when the bulls are in charge. But if you're not anticipating, if you're not recognizing transitional moments, then you're not going to know who's in charge. So it's always going to be harder to execute if you can't think like George and I are talking, right? Anticipating what we're going to say and then use us as confirmation. Be on the same page of guys that you know what you're doing or know what they're doing. If you ever followed any kind of thread or a forum where there's this guy thinking this and that guy's thinking this, you don't know those guys. You know what I mean? You don't know who those guys are. They might be right a few times and you follow them, and then they're wrong a bunch of times. And then there's that's distraction. You know, when someone comes into this room, my trading room, and they say, well, you know, it kind of gets distracting. Well, then you're not really focused on being on the same page, or you don't really trust the guy talking. You can't get distracted. You got to be able to walk and chew gum. You really do. And if a guy is bullish and you're bearish, well, maybe you say I disagree with him, or let me take a step back. He might have a point. Or I'm confident, and I know if I'm wrong, I know what to do. But if I'm going to blame him, then yeah, you shouldn't use or follow someone. But if you answer this question, Does he know what he's talking about? Then listen. Listening is the top number one weakness of everybody. They can't do it. They don't do it. And that's the first step. Magnets for direction, and then these transitional moments, lessons 8 through 11 that are on the course in the course book, to find places to get in or execute that bias. So again, if you're seeing this, it's probably that as what the next right side is. If you're seeing a long up bar and it gets retraced by the next bar, you're probably seeing that as the next right side of the market. Transitional moment. If you have a magnet already down low, now you start to incorporate a plan around where to execute. Talked to someone not too long ago. The weakness was not his trading plan. His weakness was he didn't have one. He couldn't explain back to someone what kind of trader he was. Forget about explaining back to someone what this business is. Anybody could read a book and do that. Explain back to what kind of trader you are, you want to be, and what you do. And if the explanation is, hey, I look for just a couple trades a day, find good locations. If I can't find them in the first few hours, I'm done. I'll risk it. If I want to make a little more, I know I got to risk a little bit more. But I look for that move or two that's going to happen. We're going to have a move or two during the course of a day. I'm looking for clues to see it set up. Then I'm going to put 1 or 2 trades on. I don't like to make more than 3 or 4 trades. And that's the kind of trader. You're still an intraday trader. You're still looking for multiple points, but you're still going to scale. You're still going to use these transitional short-term ideas to find better spots to execute. If you want to scalp, how do you explain that back to someone? If you can't explain it back to someone that's sort of a novice, then you're not going to be able to execute and implement something that you don't even know what kind of trader you're trying to be, right? Can't explain it back. You don't have to be successful, but you should be able to be successful at explaining it back. Now, let's go to the actual exercise, all right? Because now I was just giving you guys a little bit of a pep talk. Let's go back to the charts. You guys should see the charts on the screen share, right? So this is the charts that you're normally looking at in the room. Open it up every morning. Open up the chart so it's full screen like it is in here, okay? Take this thing back. Said this in the room. Take this thing back to some moment where you have no idea what might have happened next, and you just go, all right, I'm going to now take in the bottom right-hand side, this arrow down in here, and go 1 click at a time until I see something. Oh, I just seen something. Let me go back 2 clicks. What did I see? I seen it go up and then down. I'm bearish. I think this thing is going to go sideways to lower. And it hasn't. Okay, that's fine. When do I start getting bullish? Right now. I'm no longer bearish. I'm no longer bullish. I'm bearish. I think it's going to go down. What a bad example I picked, huh? What time is this? Oh, it's right in the last 15 minutes of the close. So I don't like trading the close. Well, this is choppy, right? There's reasons to go up and to go down in this chop. Bearish again. Should go down. Is going down. Great. Bearish, but I don't want to sell it right there. Let's look for a moment it comes back up. Then should go back down. All right, it does, or it is, right? It's gravitating or moving lower. Get confident. Remember, this is the last 30 minutes. You might want to stop there or start there. You kind of want to get into the midday trade or even overnight. But you could go into this and be okay with being wrong, because that happens too. But just not wrong all the time when you pick these examples. Here's what I mean. You should be bullish. You should be bearish. It goes sideways. Oop, you should be bullish. All right, goes up. Should stay bullish. Now you should be bearish. Little bullish. Little bearish. Bearish. See? And just walk through. And even if It's like you're going with the flow. If the market's choppy, so is your opinion. Going back and forth. You don't have to be, you don't have to lose money every time you're wrong. So let's go arbitrarily through another, and I'm gonna walk you in how this could be a daily exercise. Let me just take this out like this. Boom, go to here, put it on automatic scale, and let's walk through. All right, it's 10 o'clock in the morning. Now stay on the right side here, okay? Stay on the right side. Bullish. We should sideways to higher. Okay, we are. Then it comes off a little bit. So not bullish anymore. Probably sideways to lower. Oop, comes right up. I'm real bullish. I think it could rotate back down and rally. It does. Bullish again. Come back down lower. What would get me bearish? A big red bar. Should rotate down and right back up. It does. Now it's choppy. Sideways to lower. It does. This jump should be a little higher. It isn't, and then it goes down. I'm bearish again. Now I think this is sideways to lower. It is. Sideways. Now it's neutral. We could have sell stops below the bottom, buy stops above the top. You're going through. There's the sell stops. Sideways to lower. Lower again. It starts filling into what you're thinking. Keep playing with it. There's a VWAP. Probably will chop and go a little higher, come off of there. Then we have sell stops right below that 58.75. There they come out. Play this game with yourself and get good at why you think what the next bar. Don't try to be too perfect. Red bar, green bar, any of that crap. Just get into, this would be a good scenario to be into. After you see this bar happen, the images you guys see come in a couple seconds after I say it. So, boom, when you see that, you got to get bearish and not be surprised when you see that. Does that make sense? And then same thing, downside. There's other factors involved that you'll be better at this once it's real time because you'll understand context. You'll know a little bit what was going on that day. You're not even factoring in ancillaries that'll help you make better predictions. You're just trying to walk yourself and get confident that you can make the calls that George and I make real time. Do this exercise until you can get good at making the predictions. And not about trades. Don't make this difficult, please. Don't make it scientific. Don't try to say, I'd buy it here, I'm going to buy it there. You're not buying or selling anything. Just follow it, and where's your opinion if you had a gun to your head? Sideways to lower right now as I'm going through. Nothing. Oh, bearish. Probably going to go sideways to lower again. Bam. It does. Bearish. Sideways to lower, lower, lower. There it goes. You feel good about making the right call. Now I'm bullish. And what does it do? Goes up until that bar. Now I'm bearish again. What does it do? Goes sideways to lower until this bar jumps up. Then I'm thinking, bulls might have it. Then that red bar comes. Choppy sideways to lower. Then it does go down. Makes sense? Another big down bar. Go with the flow and on these 4 PNFs. You don't have to trade it that fast. You don't have to trade it that quick. You don't have to even trade it at all. All you're trying to do is get in tune with the market. You're on it. You don't have to stand up on the surfboard, but sit on it, on your stomach, ride the waves, try to predict what the next wave is going to be before it happens. This is a really good exercise. Another way it's good, this is how to do it real time, is when you get up, first thing you look at in your charts, roll this thing back to maybe 1 o'clock in the morning, Chicago or Central Time. It's when Europe opens up. Take it back to 1 o'clock Central Time, which is, I don't know, right here. Seems like it would be right here. So you roll it right in here. This is roughly 1 o'clock. And you say to yourself, all right, what happens? And you start right hand side. You want to learn how to trade. I heard someone say the hard right edge. Everyone wants to trade the hard right edge, but they don't want to work at predicting it. Boom, I'm bearish. Market goes down, I'm right. Now I'm bullish. It walks up a little bit. Now I'm bearish. Why? Because it went down. If I'm bearish for something else, I'm looking to get short. Market goes down a little bit, and it does, right? Goes down a little bit. This bar, I went too fast for you. This bar right in here, bam. What do you think the bears are? They're nervous. Bulls are in control. Should go higher. It does. You're not surprised. You're feeling confident. Now it's choppy. It's 2:30 in the morning, 3 o'clock in the morning. Nothing's going on. Some small sells. Oop, there's some buy stops that come out. Bulls might have it and run it up. They do. If you're getting good at being right or not being wrong for long, this is how you test it. That's how you test it. Just because you're bearish doesn't mean you're short. Just because you're bullish doesn't mean you're long. That's a quick thing to do as you come in. First thing you do to prepare is review real quickly. Well, we're going to see, Carl, if it's going to help you a lot, because we're going to put you on the spot. Didn't tell Carl this, but I'm going to do it right now. All right, Carl, let me open up your mic. Could you see my screen? Yes, you can. All right, Carl, can you say something? Give me a sound check.
Yeah, can you hear me now?
I hear you. You sound good. No jokes.
Good.
No, no jokes. All right, so could you see my screen?
Yes.
All right, let me open it up for you. All right. All right, I'm going to walk it each bar at a time. You see that last bar that just came out right there? All right, so what are you now? Bullish or bearish?
I'm bullish.
You're bullish after you see that bar, okay?
Yeah. How about that?
So it's just happened. Why are you?
That was just that was a doji bottom.
Oh, don't start with the doji bottom stuff. All right. Doji bottom. This is going to be recorded and out there forever. People get to enjoy this forever.
I'm sorry.
That's okay. Now what are you?
I've got no opinion at that point.
All right.
Son of it.
You should be bearish. Only
I'm
because.
Bearish now. Well, I was. Yeah, I'm bearish
on.
now.
Fine to be bullish in here if you think it's a head fake, it walks up. I don't have an argument for you. But when this green bar goes up and then the whole thing gets retraced with this red bar, you should at least be sideways to lower.
Right.
And that's exactly what the market does. Goes sideways to lower. Same situation in here, right? Green bar up, big red bar, right?
Right.
And the market does go
lower.
sideways to lower.
Yep.
How about now?
Now I'm a little bullish now.
Good. And hopefully not, because this is today, by the way. And a couple reasons to get bullish. Number one, it came into a good support zone, but who cares about that? What got you bullish?
Watching it go back up. And
there you go. That's it. That's all I want to hear. That's the only reason I want to hear. I watched it go back up. That's it. Keep it simple. Price will be the first thing to tell you what the hell it's doing. And he's right. It goes up. And a lot of people try to overanalyze their opinion. Just keep it real simple. All right? So you did a good job. I'm going to come back to you, Carl, but I'm going to put you on mute.
Oh, heck.
So this whole life, that's the story of your life. All right, let's go to. I'm not gonna go to Jeremy for this exercise, but I just wanted to give you guys a sense of keep it simple with your decisions. And if you're wrong, where you'd be wrong, and that is changing your mind, right? So if you're bullish, you're like, shoot, I'm not bullish anymore. That might be how you were wrong. That's good. If you're not wrong a lot, the owner of the prop firm said to his guys, if you're not wrong a lot, you're fired. Another thing with these small round tables we're going to roll into now, we're going to talk to Jeremy about a trade or two that he had today. Just walk quickly through it. That's what we did in the prop firm. As if you guys worked for me. None of you do. If you did, sit and tell the owner what you did with his money, because that's what we did. He was in the meetings, and he didn't say it like that. He didn't say, okay, I want to know what you guys did with my money. It was just trying to work with each trader. All right? But that's how we're going to trick our mind into working together. Go around the table. Let's go around to Jeremy real quick and see what he did. Jeremy, I'm going to unmute your mic right now. You there?
Yes.
All right. What was it around 9:50 you told me, or?
Yeah, the first one would have been 9:46.
9 Eastern?
No, that's Central.
Central. All right. What'd you do? Buy it or get long or short?
I bought it. I bought it at 74.25.
I should make sure I'm on the right time here. Okay. Why'd you buy it?
It was coming back down into a thin spot and against the VWAP, and also in one of your levels, but I'm not sure if that was there or not.
So go ahead.
So yeah, I bought it at 74.25.
Were you anticipating buy stops?
I was anticipating a bounce and hopefully to go back in to catch some buy stops to continue going up.
But that's, to me, the best reason to buy it. Like, when you said you bought it off a thin spot, you mean it bounced off a thin spot. Is that what you're saying?
Correct.
Okay, good. So you weren't buying into a thin spot. You were buying after it rotated down off a thin spot.
Right.
Good. All right. So that's a good trade. And did it work?
I got out for a scratch because there were a lot of sellers jumping on the teeter-totter, and it was too crowded. I didn't like the looks of it, so I got out while I could.
And that's fine. It worked, though. Were you mad that it worked after you got out?
I got out with my money intact, so that's fine. Doesn't matter.
Well, wait a second. That's way back over here. How the hell did I get so ahead of myself? All right. I'm sorry.
Right there.
That's right here. I was too far
looking
ahead.
at your screen, sorry.
No, that's it.
Yeah,
I had it fast forward. So you got long in here. It actually only did go up maybe a point and a half to the open, and then rotated back down. Did you have any money into it?
No, I didn't get any money into it. See that 924 to the right?
924.
On the sell side.
Yeah,
just to the
right
there.
Got it.
That's where I got long.
Ah, I see. Okay.
It bounced off the open.
You didn't
down.
get long going up. You got long as it
No.
rotated back down. I understand. Okay. All right. First, I thought it was a momentum trade, but you were playing it back down to this VWAP slash thin spot.
Correct.
So it was a good enough spot for you to scratch it.
Yes.
And it rotated sideways for a while. What's the next thing you did?
When it came back down, go one bar over again. They're right there. Same play, but to the downside.
Nice. And you got short in here?
I got short right there. And that one I did take for a winner. Got out at 72.25 and 71.75.
Nice. And I was trying to think if that's the one I said, that's a trade where you get bearish, sell back up here, but buy it because there was a level down there or something. So you got out before it chopped. What was the next thing you did, Jeremy?
Those are the two that I pulled out.
Oh, those are your only two trades today?
No, I've got others. I have to pull up the records and see what it is I did.
Just give me a time. You don't have to give me the whole rationale to it. I'll explain the rationale back to you maybe. Just pick one randomly out and the time.
See if I can figure out how to read this.
No, that's all right. Take your time.
Using so something about 11:50.
Your time?
Yes.
All right, so 1050 Central. All right. Was it around 1150 or right at
No,
1150?
right at 1150.
I'm going to guess that you sold it. No?
Nope, I bought it.
Where'd
I
you?
haven't even looked at the chart yet.
No, that's all right. Look at my chart. I'm just trying to guess and say, okay, you had this big up bar. So wait, maybe you did buy it against this thin spot. 68?
Yes.
All right. If you didn't buy it, you might have started to get bearish. Now, this ain't
Correct.
a bad trade at all. What'd you do with it? Did you scratch it? Small loser?
I got a small loser. Lost 2 ticks on it.
That's nothing, and that's a good spot to get long. When did you get out? On my 4 PNF, roughly, when did you get off, if you're looking at my chart?
Just as it rotated back down through it, it kept on going. So,
Nice.
yeah, it did. I didn't even give it a chance to bounce back up. It blew through the thin spot, and I was out.
There you go. And that if you weren't long, let's say you weren't long, or you were even long, but you got out because you knew that it shouldn't have went down that far as I moved this thing over to the right.
I got in at 68 where it came down to that 547 by 360 and bailed, shipped 2 ticks later.
And so if you were doing this exercise, you start to get bearish now. And sure enough, the market moves sideways to lower. And we had 65 as a target. It rotates out of here, jumps up. Carl rightfully got bullish around there. And then I wouldn't get bearish because I know we're just making lows right now until right there. And I'd be even a little early. It's choppy. Probably wouldn't have made money, but I wouldn't have lost money because it's not going lower, but it's just choppy. Now I'm seeing sell stops below 66. Bearish again. If this one didn't do it, if this one didn't do it, this one should do it. Still didn't do it. Sideways. How long is this? So this is since I've been talking what it's been doing. This is a tough market to trade, this chop. This bar should get you bearish again. Again, when I say bearish in here, when it does this, that, and can't go down, this bar comes up, now you're not bearish anymore. Now you are bearish again. This bar here. Finally, it goes down. It took a couple before it actually went. But if you sold it in anticipation that, well, it's going to go through the lows in here, and you sold it back up on a pullback, you don't get killed because it stays around there. Same thing with here. Stays around there. This guy was the one that finally let it lower. Maybe you don't get in, but anticipation of this big down bar that finally happened over the last 5 minutes, you finally were going to get. And you just go back and forth with it. You guys got to let me know how that works. With what Jeremy went through, it's going to help you to talk through your trades instead of just going over like the bad ones. Do you feel like you missed anything today, Jeremy? Let me say this. Do you feel like there was a trade you're going to take and you missed it and it would have been a good one?
Yeah, there are several. Somebody pulled into the driveway and looked out to see who was there. I missed a trade.
Where was that? What time? You remember?
No, I don't.
That's what I want you guys to start doing. I want you guys to start, the missed trades are invisible. They don't come up in your stats. You can't look back, so you got to write down where you missed trades. And it's what we went over with what I went over with this other trader about. Instead of just trying to focus on all your bad trades all the time, your mind gets caught up in that. Now listen to this very carefully. Try to train your mind to focus on what you missed. But you got to write it down because they're invisible and they don't come up on your stats or your log. So go over and say that moment, write it down, just like Jeremy says he don't remember. Well, how are you going to reduce the chance of missing it next time if you don't go over it. That's what we should review. And I'm not saying that, listen, I didn't really click for me till I had a discussion with another guy. Didn't click for him till he had a discussion with another guy. But we all in the chain have been doing this, and that's where sharing helps. Write down trades you missed that worked. Focus on those more than you beat yourself up on losing trades. So if you catch more opportunities, you'll minimize the losing trades altogether. Really powerful stuff, I'm telling you. It's coming from a guy, it's a super trader. And when he was told about it from another super trader, it helped him. That has to resonate with you. Trust me. Missed opportunities and why you didn't take it, what you missed, what was the problem. It'll help you miss less going forward. So I like these things that we're doing with Jeremy and Carl. We did it with a couple guys last week, just quick in and out so we don't get boring. We don't get boring or anything. But Jeremy, thanks for contributing, all right?
You're welcome.
All right. So let's go to George. He's going to share his screen, and we could kind of wrap it up that way. Gary says, who's an excellent oil trader, says he's missed about 5 to 8 trades per session, and he makes a log of it. And that's pretty cool. When you start to see those missed trades go down, instead of 5 to 8, maybe they're 4 to 6 or 3 to 5, your revenue should jump. I like that. Maybe you could share that with us at a future session, Gary. This was a good session, two-sided with some predictable moments. Let me get rid of this down in here. All right, I'm making George organizer. He's going to share some things he's seen today. George, you should have the screen.
Yeah, I got it.
All right.
You want to just use your Delta chart 2500?
Yeah, sure. Hold on a second. Let's bring it over.
Expand it.
Yeah. Let's actually make it as big as we can get it here. Let me change you're coming in through my, let me just change one thing. Hold on, George. 1 second. No, that's not going to do it. Do it from here. Hold on, guys, 1 second. There you go. George, you there?
Yeah, I'm here.
All right, good. So what we got, let me just go over these comments to wrap it up, and then you can go ahead.
All right.
Gary says the change it brings is that he's okay with them. Earlier, he used to jump straight in after missing a trade. And everyone knows what that leads to. So that's huge. It's like saving money makes you money. He's okay with missing the opportunities. So that's step one. You don't get frustrated. Your mind is really, really evil when it comes to, you don't even know that you see you see a trade you would never take if you had caught the previous one. But your mind is playing tricks on you to try to make you feel good because you just feel bad you missed something. If you talk your mind down and say, I'm okay with mad, I'm not that mad. You're mad. You're the one that holds grudges, not me. You got to talk to your mind that way. So you hold grudges. You're mad you missed that trade. I'm not mad. I'm supposed to miss trades. So it's a good comment, Gary. Thanks. Just by logging them, that's what it's helped him do. And that's why that's why staying in touch with other people who are doing this and are like-minded, doing the right stuff instead of the crappy stuff, instead of the stuff that doesn't matter and waste your time, keeps moving you forward. All right, George, go ahead. You want me to do some illustrations as you're talking?
Yeah, I mean,
Go ahead.
No, after the open, we had kind of had a divergence coming in. See that? See the up bar minus 2,500.
Yes.
We blew the top out. Then right around, you somewhat transitioned lower.
Well, here, you know what? Let me run this chart here so we could just kind of do it to the theme of the exercise, where you get the market to have a red 2,500 bar. So when you're still in this bar, you're like, well, there's trapped shorts, right? The trap guys are going to be whatever this number is. If this is a green bar up and this is red, the shorts are trapped, and you guys should know by now shorts trapped means buyers, and it does go up. All right, go ahead from here.
It was with the combination of identifying 78 was a level that and that was a naked POC from yesterday's close. You can see the red line that comes across.
Mm-hmm.
So you had the trap aggressive 2,500 sellers. You had a level where there's potentially stops, and it hit the stops, busted through it, right?
Mm-hmm. Busted through it.
And then as you traded higher, when you kind of had a little flush of weakness, and then you recognize the NASDAQ being a little bit weaker, but the crude oil is a little bit stronger. So you got a reason to go down, the NASDAQ. And if you put kind of try to put a few shorts in there, you got paid a little bit easy, and then that could help confirm your bias, right?
And then you had 79.5.
Yeah, 79.
That's that previous POC, which is right here.
Right there, yeah. And then, usually if you're going to trade higher, you leave some naked POCs on the bottom. If you're going to trade lower, you don't really go above the POCs on the top.
Yeah, so let me just recap that. If you're watching this real time, it goes down through this one. But when it goes up, it can't go through that one. So your bias is continuing to be confirmed. Plus, there was a more miniature or small time frame transitional moment, up in there we were talking about in real time. But go ahead.
Then as you traded lower, just follow the POCs, and then if sometimes they can cause you to be patient, like scroll over to the right. When we got into a consolidation in there, see that bar that kind of made a new low and then all of a sudden made a new high? That's basically like a long up down bar.
This guy.
Yeah.
Yeah.
So unless you quickly start going below 70 in there, there's probably going to be at least some sideways. And that's kind of what happened.
Sideways to higher, because even near term was confirming or validating that we were going to test some big orders that happened to be in line with this POC, 77.
I mean, the POC on the reversal bar was 71. I mean, if you're bullish, you could have waited for a pullback to 71. You know what I mean?
Right.
Right. Yeah, right there where you got your mouse.
Well, this was when it was testing here, couldn't go, and there was a transitional moment back up around here that made these overhead small areas of resistance week, and they were going to have a magnet, and they had a magnet to 7. If you're listening to the cadence of the room, we were going to 75, we were going to 76, we were going to 77, and we did. That PLC then held, and there was a transitional moment down. All right, let me keep going over, and you could continue, George. Go ahead.
And there's your transitional moment there. The tempo picked up. You failed at 76, 75, 77. And then you knew you had stops below 70.
Oh, yeah.
And you already had a identified downside target.
So now you take this. Let me take this like this. Hold on a second. You take this and you go, let me put it back here a second. And you go, the moment where you had, back over here, the moment that you had that 77s get achieved and you're like, all right, forget about all these yellow and gray lines, or purple and gray lines a second. And you had 77s get touched, 92 traded right in here, sideways. You could still be bullish until what? Until you start going, well, what the heck's going on? All right. Bulls are excited. Bulls are dead. That's it. If you practice, you'll see this real time. If you practice, see that this happens, and you're able to call, this market's going to get stepped on, you'll have confidence to execute. And downside was just to the tune of 10 points. It was gone.
Up there, that's why I called 77 the line in the sand. It was like, well, if they could get them above 77, then
that's like 4th down and goal, and they either convert or they don't.
Yeah, they needed to get them above 77 and hold them above 77 to have a better chance of making new highs.
The Bulls needed to make a 1st down right there. And when they didn't, the game went the other way. And that's another way to look at it. Plus, now 77 just wasn't that PLC on that previous bar, but there were big orders stacked up there in the dome. So you're seeing stuff on the footprint and on the dome. You're taking some profile theory with high volume nodes, and you're combining it with order flow with the delta and what's on the dome. But we're talking about executing, which is what trading is all about. If you get better at your predictive skills, you get better at clicking the mouse, both to get in and out. Another thing that I think might help you, Gary, whether you realize it or not, with looking through, logging your missed opportunities, he's okay with missing subsequent opportunities in the future, but he's also able to know that he's going to catch another one, that there's another one around the corner. Or what I really wanted to say was getting out, because there's going to be another one around the corner, right? So when you can get out of a loser, if a trade's important to you, it's going to be very difficult to get out for both a winner and a loser. And trades are often important to you if you don't feel like there's going to be many more. So you got a long rope. Give yourself a long rope, figuratively or literally, and just know there's other opportunities. Don't marry trades. Anything else you wanted to add, George?
Well, I mean, the retrace back up was to POC.
Here, let's look at it.
Making new lows again. There it is.
57.5, yeah. Remember, with these bars...
No. It's at 69...
oh, right here.
Yeah.
That's also where the stops started. The stops were below here. Comes right down.
You see the small one after that big reversal? Okay, and you went plus 25. How this one, the way that it's floating back higher, okay, this look right here, I predict higher prices.
Because why?
Okay. Because it's like if we were off to the races to the downside, it would have kept doing it there. But the Bulls made a stand. Now it's time to work on some shorts. Is my profitable shorts is my interpretation. Wouldn't be surprised to see the 72.5 at some point.
which is this guy.
Yep.
What's the difference between this POC that it goes through back here and this one?
There's just that many more, they had that much more ability to take it that much higher.
Yeah.
I can't,
Good answer.
I mean,
there is no answer. There's no scientific answer.
Yeah, I mean, it's not like everything is, perfect.
No, it's not right. And that's what we look for, and we'll never find it. So 67.5 is a target right in here. This was a target in here, also where the stop started. We kind of understand why that might work structurally. But remember also with these delta bars, you can't look at them like exactly 4PNF. Every other one doesn't rotate. So you have to look at them in chunks like that's a high, it goes down here, rotates up, comes down, rotates up, comes down, because there's a lot of rotations within each bar. There's a lot of rotations within each bar. What do I mean by that? Well, if you look at it, these bars right in here, the 12500 bar could be all of these bars on a 4PNF. Look at all the rotations within that one bar, for example. So let's go back to real time. So what would get me to agree with George is some moment where it head fakes lower and goes higher. Like near-term stuff, it did kind of walk up higher in here. So if you're just practicing this exercise, and that is when, oops, what the heck is that? And you go, bam, you see that up, then it's near-term sideways to higher, and you get it. Couple kind of like, should have went down in there, didn't go up that much either, should have went down more right in here, but didn't go up that much. Finally, this was the one to say, we're going down. And if you look at it, there's more red in this bar anyways. You know what I mean? Like in this down bar, I could have thought that the sell-off was imminent right in here. There wasn't a lot of red in it, including that one. But there's a lot of red in this one. That was the tell bar that we were downside was the next right side. And it was. Tempo. Now we're just drifting. George thinks that we could have found a bottom, right? For me, not looking at anything else, I want to see a head fake, like another failure of this low, maybe 64, and then blast up. Because then that'll get some more shorts sucked in. So we start to wiggle down. People are like, all right, it's going down. Oh, no, it's not. That'll make those buy stops achievable. But right now it's dealing with that 67.5, the high volume node in his 2500 bars. Let's go over some of these questions. Some might be for you, George. No, the high of the day bar has that negative 2500. Does that mean anything? No, because usually a high bar might have, right, a minus 5,000 or minus 2,500.
I mean, it could. I just, I think, you make the high of the day and then you have a reversal. It's pretty significant, right?
Yeah, but is it being 2,500 different than if it closed? It was the high bar, but it was positive 2,500 it closed. Is there a difference between it being a negative 2,500 or positive 2,500?
I'm not really understanding the question.
Yeah. The fact that the high bar of the day is a negative 2,500, does that play a role in predicting that that's going to be the high of the day at that moment?
Yeah, it can. Yeah, because it's like the buyers got exhausted and then, all of a sudden they pulled the rug from underneath them.
There's other things you want to look at up there. I'm trying to make the answer not so simple. Like if you see a bar and it's at what could be the high of the day and it closes negative 2,500, to me it's not like, all right, that's the high of the day. It's not that simple.
It could be a clue.
Clue, that's a good way to put it. Could be a clue.
Like let's say you're bullish, and all of a sudden you notice that. You're like, well, wait a sec. We made the high on this bar, and then it kind of reversed, and sometimes, like you'll make a high and then reverse, and then if it's still bullish, they'll just like recoup it in the next one and even faster than when it went down. So,
have you found any significance in the height of an individual bar?
It depends where you're at. I mean, you can completely wipe out weakness or wipe out strength on the size of it. Yeah. Depends where you're at. I mean, they're more significant around highs and lows. Like, the previous one to the one being made right now is pretty significant. Like, it's the bulls came in or the bears came in on that little one, after making the low. And they bought everything that was available.
Yeah,
really
they did
quick.
They did it quick. That's it. They did it quick, and then it's like a rejection look out of the hole.
Right. And they kind of soaked up everything available pretty quick.
Mm-hmm.
And then then it's like kind of time to work on some profitable bears, that are, see if there's any more buyers up higher. You might have ran out of willing sellers after, everything they had for sale down there got soaked up.
That's a
pretty
good
quick.
That's a good real-time read that you could physically see. I think that's where a lot of weakness of people, by being people, look for a lot of physical evidence of what's going to happen. Well, this might, you don't want to, if you need physical evidence for everything, you're going to be frustrated. But like a small bar, which means in order for it to close, it has to have at least 2,500 positive or negative. The fact that it got 2,500 positive means buyers came in quickly.
Yeah, I mean, for that moment, they were on sale and people bought them up. Like,
well, it's that cheer.
I want them, give them to me.
Well, if you were in the pit, you'd hear a roar,
Yeah,
or if you were in an auction and you were lowering the price and a bunch of hands came up, you found value down there. So Gary just follows up and says exactly on a point I made earlier about allowing it to cut your losers quicker because you don't feel like each trade's important. He says exactly, I'm able to bring my average loss down 6 or 7 ticks just because of that knowledge and that type of review. Ken wants the group to know that Eurex is introducing a new DAX market, which is commencing on October 28th. It's a mini version, €5 a point, and it is 1/5 of the main current DAX market. Sound familiar? That's exactly what the E-mini is S&P, 1/5 of the what the big contract was. So it's €5 a point instead of 25. Yeah, so 5 instead of 25. The regular DAX market's pretty thin. So the it'll be interesting what this mini looks like.
Now, you guys see that small bar look? So ideally, if you were still bearish, okay, and the market was truly bearish, all right, what you would have wanted to have seen was within that bar. I mean, I don't want to get too scientific, but within that bar, when they hit it with the buys, you'd want to see it come like around plus 2,000 and then quickly reverse, okay? And as it reversed, get stretched much lower faster, okay? And not give those people that made those quick buys time to get out.
Say it again.
It's a little too.
Oh, it was good. It was good. Say it again.
But what you want to, as soon as you see the quick buys, like they hit it and they bought everything available, you'd want to see it go about plus 2,000, plus 2,200, and then you wanted a quick, thin transitional moment right back to the lows, and the prices keep going so low that the people that came in and bought all those that they thought were on sale not be able to get out. And then they're the ones that chase it down and finally puke significantly lower. And it's like an empty pocket of volume, and a liquidity moment. And given today's context of the market, you couldn't really expect that at that time because, the XLF is still strong. The NASDAQ is underperforming, but, the XLF's enough to keep it two-sided,
Mm-hmm.
So you gotta put everything in context. Now, if crude oil is like slamming lower and the NASDAQ was slamming lower and, there's fear about something, that's the sequence that you'd be like, oh, we got the buyers, we need to go lower, See, it's like that wave of buying is the ones that are going to be giving up the money, But in this instance, with the context of everything else going on, that wave of buying stopped the move lower.
Here's the step-by-step approach to, you guys could keep going back if you want, but it's step one is to understand the simplicity of what drives prices up or down without trying to be an expert in anything, including profile, just understanding after you buy it, you're a seller. Step two is to execute, even though you might not even know what the hell you're executing. Get in there, trade something. Just trade. That was a cliche at the Board of Trade. Just trade. The next step is to get a feel for direction. Most people try to get a feel for direction and predict as their first step, thinking that that's all they need and the rest will be easy. They don't even have an execution step in their process. So this was a good session. Good exercise, good session. Jeremy, Carl contributing, thanks again. George contributing, thank you. And we'll record it. It's been recorded. We'll pop it up. I'm going to end it for guys that are watching it on